know if y'all have noticed, but the market seems to be hitting all-time highs almost every other day at this point in time. I mean, the Dow Jones closed 2020 being up over 30,000. And if you think about it, it took the Dow Jones about 25 years for it to go from 300 to 400. And it took us about 8 months to go from we're below 20,000 all the way up to over 30,000. And it just keeps climbing now that we're in 2021. And the S&P 500 is no different. It's actually hovering about 3,800 points right now. And so when you look at that, and then you also look at things like the Shiller Index, which helps us know if the market is overvalued or undervalued, the CAPE Shiller Index, and you look at it and usually it hovers around 10 points, and right now it's up to about 34 points. It makes you feel like, oh my God, this market is so overvalued. How am I supposed to invest in this thing? So in this video, we're gonna talk about exactly how to invest in all-time high markets. Let's go. What's going on, people? It's your boy Kalechi back with another video. If this is your first time around these parts, hit that subscribe button. If you enjoy anything that we talk about in this video, hit that like button. Turn that thing blue, just like my dapper suit. But anyway, y'all let me know. Should I wear more suits on these videos, or should I just keep it simple with my basic hoodies and my t-shirts that I'll be rocking in this video? The only reason I'm actually wearing this suit is I just got home from church a little bit ago and I didn't change, and I was like, I should keep the suit on when I make this video. And I felt like James Bond for a second with the shades and everything. But anyway, let's get into the topic for today. We're talking about how you can invest during all-time high markets. There's a couple of things to know about some of the facts that I dropped earlier in this video. Let's begin there. Earlier, I mentioned the CAPE Shiller Index, which is an easy way for anybody to look up and see if the markets are overall overvalued or undervalued. Basically, it takes the PE ratios of all the companies within the stock market and determines if it's overvalued. Usually, that PE ratio is around 10 points, which means that people are willing to pay $10 for every $1 of earnings that a company makes or the entire market makes, which is usually where it makes sense. Right now, we're sitting at a PE ratio of 34, which makes me go, whoa, that is way overvalued. However, something we have to pay attention to is the market is not as overvalued as it seems on paper. The thing you have to pay attention to is the fact that tech companies are holding up the market a lot. As a matter of fact, I think about 5 companies are basically have the same market weight as 350 companies within the market, which means the top 5 tech companies, we're thinking about your Apples, your Amazons, your Microsofts, your Googles, your Facebooks, are basically the same as 350 other companies within the S&P 500. So you can see how much these companies are making and pulling the market, and wherever these companies go is where the markets go. And so just with that in mind, it shows you just how much that is making a difference. As a matter of fact, the market is made up, at least in the S&P 500, is 25% just tech stocks. And during this pandemic, tech stocks have been the move. Every tech stock, stay-at-home stock has kind of exploded during this time. And with that in mind, that should give you a base to say, hey, maybe there are still opportunities for me. So now let's talk about exactly how we can play these markets, exactly how we can move ourselves to ensure that we're doing very well. 3 things that each and every single one of us can do to invest during this overvalued, or when it feels like the market is overvalued, when the market is on a major bull run. The first thing that each of us can do is do not stop investing. Continue to invest. I know it's easy to sit back, or it's easier to be like, man, it's overvalued. I'm not seeing anything. I need to just stop and get out of the market for a little bit. But the problem is when you start trying to time the market, that's when the market starts to beat you. Like we say on here, time in the market is better than time in the market. So it's better for you to, if your strategy needs to be just dollar cost averaging your way into an ETF or an index, do that. But do not stop investing, because at that point, when you stop investing, guess what usually happens? That's when the market continues to fly up. It's like a quote I heard from somebody. When you choose not to buy a stock, that's when the stock explodes. The moment that you choose to buy that stock is going to go down. But the point is, do not just keep waiting and waiting for the perfect opportunities to invest. An easy way to just keep investing when the market feels overvalued and frothy, just invest into an ETF. Dollar cost into an ETF and you'll be fine. Dollar cost into S&P 500 ETF like VOO or VTI or SPLG or any of these other ETFs. That way you can prepare yourself for the journey ahead and you can keep investing. Take a look at this. Think about this. In March, when the market tanked, a lot of people bailed out of the market, removed their money from the market. Then the market started recovering and they kept on waiting, and they're still waiting till this day for an opportunity for them to invest back in the market. So do not try to time this thing. While you are still waiting for a good opportunity, keep investing. Invest dollar cost into ETFs if you want to do it that way. The second thing that every single one of us can do is start building back up your cash reserves. Start bringing back up your cash reserves. It says that about 10 to 15% of your investment portfolio should be in cash, so that whenever anything happens, if there's a correction or something like that, you're able to act quickly. You're able to get into the market and make the moves that you want to be making. So build back up your cash reserves. And that goes into the third thing, which is start learning about other companies. Start growing your circle of competency. Maybe you're a passive investor and you want to become more of an active investor. During a bull run is a perfect time for you to keep learning, not for you to invest necessarily into single stocks, but for you to start learning about other companies that you can possibly invest into, for you to find businesses that you love and start learning about it. Start understanding how to do a discounted cash flow calculation, how to put all of these things together, how to read financials, how to understand a company, how to listen to earnings report. A good time to do that is not when the market is crashing and you want to start making moves. That's not the best time, because at that point you don't know which company to pick, you don't know which stock is still good, you don't know which company is going to survive during a downturn and all of these things. It's not during a bull run, it's not during a crash that you start learning. It's like a rapper that I love says, Andy Mineo, he always says, if you stay ready, you ain't gotta get ready. And so if you stay ready, if you have your cash reserves, if you're learning about other companies or you're learning about companies that you want to keep investing in, a good time to do that is during a bull run, because then you don't have to be drilling into it and trying to find the perfect price point, because if everything is exploding, there's no perfect price point at that point in time. And then finally, the fourth thing is go back to the basics. Your emergency fund, staying out of debt, all of the basic things that we always talk about with personal finance. Go back to those things. Make sure that you have your emergency fund set. Make sure that your debt levels are good and actually you're out of debt if you can stay out of debt, except for maybe your mortgage or something with extremely low interest rate. I almost said PE ratio. But stay out of debt and protect yourself during these times. I know when the market is on a crazy bull run, it's easy to let go of all your fundamentals and just be like, it's gonna be okay, it's gonna be fine, it's gonna be fine. No. Stay strong, stay seated, and do the things that you know you ought to do. But anyway, that's all I got for y'all. I hope y'all learned one, maybe two things out of this entire thing. And your boy's about to be out of here. Remember, generosity is always greater than greed. God bless each and every single one of y'all, and I'm out. Peace.